All right, what up, everybody? It is Jeremy with Escape Velocity Trading coming at you for the market bias update report for the week of Tuesday, May 28th. Today is Tuesday. I'm a couple days after our normal Sunday posting. One, because we had Memorial Day on Monday and the markets were closed. And two, I was on vacation dancing my face off at a music festival in Southern California. So shout out to anyone that was out at LIB. But with that said, let's dive right in. We have a short trading week this week, lots to cover. We'll go in, just do this real down and dirty, real quick. First off, S&P 500 futures market. We are still in consolidation here. You can see I have an alert to set and give me a ding if we break above the previous high here. We have wicked above that zone, but we have not closed above this zone. So I am looking for a daily candle to close above the wick high from our previous pivot, and that will signal that the continuation pattern is complete and that we are looking for a continuation to the upside. We are a little overextended and in kind of a sell-off pattern on the RSI. The MACD is rolling over, and we did get a larger bar for volume on this big red bar there. So to me, I kind of feel like this needs more time. If we do get a breakout and a close above, I will probably play it, but be very, very cautious with it in my position sizing. If we get some follow through on that, then I will get a little bit more interested in it with a little bit more aggression. Other scenario, seeing it continue to just chop here sideways for the next few days. We have broken down and closed below the 9 once. If we get more closes below the 9, as long as we hold the rising 20 period moving average, I'm not going to be too concerned. But we do want to see some sideways action here. Let that 20 period moving average come and catch up into that 5,300 level, and then hopefully get that breakout to the upside to see continuation. Hopefully by that time, our RSI and our MACD will sort themselves out. So if we go out to NASDAQ, rinse and repeat, basically identical. You can see that we have broken above and are actually grinding higher slightly on the 9 EMA. This looks a little bit more constructive, and this is mostly because of the AI conversation and semiconductors like AMD and NVIDIA. Lots and lots of money have been flowing into semiconductors, so I'm guessing there's probably going to be another push in the AI space that drives the market higher if we do end up taking a next leg. That is likely the portion of the market that is going to lead the charge. Next up, we go to RUT. This is Russell 2000. Still consolidating, stuck in a range. Not really a whole lot interesting here to me. If we do reclaim probably around that 2100 level and start to see the MACD and RSI clean themselves up a little bit, I might be interested in playing a push back up into 2150 to 2170. But this chart honestly probably needs more time to develop, and I'm less interested in it than I am in the NASDAQ or S&P. Going out to the Dow Jones, this one is actually breaking down, and the Dow Jones has a lot of consumer discretionary stocks, larger consumer discretionary stocks that pay a decent dividend, that don't move as quick. And the consumer in the US especially, but globally right now, is finally starting to feel a little bit of struggle economically. So this is not a great look or a great breakdown here. We are looking to see if this support level here can hold. Our old resistance now becomes new support, but we have broken down below our moving averages. Our 9 EMA is now crossing below the 20, so not a fantastic look here. If we toss it out to the weekly chart to get a little bit more clarity, you can see that we are actually breaking down below our moving averages on the weekly chart as well. So this leads me to think that this might end up being a double top on the short term here, and we may end up seeing more selling pressure coming back into the 37,500 to 38,000 level. That is where our next key support level is. And by that time, hopefully the 50 period moving average on the weekly chart will have crept up a little bit into that zone and act as some support as well. But right now, not interested in the Dow Jones for trading. We go out to Bitcoin. Bitcoin is starting to look more interesting to me again. We had this nice big recovery off of kind of a head and shoulders pattern here. Got our push higher back up into our previous resistance zone. couldn't break through it, and now we are just grinding on the 9, trying to hold support, oscillating back and forth between sell-off days and recovery days. Right now, my base case is moving higher and eventually breaking out to all-time highs, but this might need a little bit more development. I don't particularly like the wick up here on top on this big red doji candle. So we have to see a little bit more data here. I'm not overly convinced that we are going to see this in the next 24 hours. We are not imminent in that regard, but I do think over the next week or week and a half, we should see prices move higher. So I am keeping an eye on Bitcoin. Going out to Bitcoin's cousin, Ethereum, it has been on a tear. So this was a gorgeous pattern here. We had a really tight consolidation here for quite a while in relative terms to the previous volatility that had come into the market. We have had our moving averages sort themselves back out. The 9 is above the 20. The 20 is about to cross back above the 50. All of those are above our 200. So that is screaming bullish. We are, however, overextended on the short-term push. I mean, this has basically gone up 30, almost 32% in 11 days. So not a great entry point here, except for day trading. I would love to see this just go neutral and do absolutely nothing, kind of chopping in this range between about 4,000 on the upper side and about 3,600 on the lower side. If we can just maintain that for a week or two and set up a push from 4,000 back up to all-time highs of 41.38 and then above, I would be interested in a trade there. Or if we get a deeper pullback and come back down into probably the 34 to 3,600 range, hold that as support, and then get a signal candle showing higher prices are to come, I would also love that. This big push here, we jumped almost 20% in one day. And that was off of news basically that the SEC was reconsidering their position on approving a spot Ethereum ETF and that was actually going to be coming. We have now had follow through on that in consolidation. Sounds like it is still in development, but the SEC is approving that. And now we are just waiting for various companies to launch them and for them to actually become tradable instruments. So it'll be interesting to track that news story as it develops. But that's why we've had this huge push. And I'm not usually interested in chasing at the top end of ranges like that. So need to see this settle down just a touch. Going out to crude light. I've been saying for weeks now that this support of the 200 period moving average was very likely to hold. I still think that, and I think that we are just in the early stages of confirmation for this to be a higher pivot low on the weekly chart, likely coming back up to 85 to 87 range on the weekly chart. And if we toss this out to a monthly chart, if this weekly bar turns green and turns this monthly candle green here as we close out the month in the next couple of days this week, I will really like the look of this. The 9 EMA has now crossed above the 20. We had a wick test down below. We have now come back up and are holding that so far. RSI looks good. MACD looks good, starting to turn positive over our zero line here again. So nothing bad to say about crude light. Now, with that said, we do have the 50-period moving average directly overhead, so ultimate confirmation of the reversal and moving higher probably will not come until we break out above the candles over here to the left of the chart and get above the 50-period moving average. That puts us around 82.50. I do think that there is an opportunity here potentially to do some day trading that might turn into a swing trade. I would like to see this resistance on the 200 period moving average on the 4-hour chart hold, see it pull back, come back down, test into the like 79.50 to 80 level, hold that in a high base for a little bit, and then ultimately break out of this 200 period moving average that would converge down into around 80 and 50 cents. Going back to our daily chart, breaking through that level, we would then have a move of roughly $1.30 or 1.6% that we could expect to get immediately coming off of that intraday breakout. And for a day trade, I'm guessing that would be a pretty significant opportunity there based on where we get our stop losses. So I do like the look of crude light. And I think we, again, are just in early stages of development here, but we should see some follow through to the upside coming to a theater near you. Going out to gold. Gold is looking interesting. It has confirmed off the 50-period moving average. I don't really like the decreasing in momentum here. Usually when we are in an uptrend, you set a higher high, you set a higher low, you set a higher high, you set a higher low. This time we did set a higher high, but it was by pennies. And pennies on a $2,300, $2,400 instrument is not significant. So basically, we now have a double top here where we have lost the bullish momentum, and instead of setting a significant higher high, we are setting an equal high. Now this needs some time to develop. Hopefully we get some consolidation and we hold the 50-period moving average. We bounce around between our overhead resistance and that 50-period moving average as it continues to rise, get a little bit of a cup and handle pattern here, and then break out and move higher. So this needs development, but I do like the look of it. Staying on the metals, we go out to silver. Silver had a massive power candle coming off of our Memorial Day weekend here. Obviously, already back up in resistance. There's not a whole heck of a lot we can expect to do with this on the short term, unless you are strictly trading, day trading on it. But again, we are pushing right back up into resistance here, and then we have a secondary resistance directly overhead. So it's going to be hard to map out a trade on this. The trade on this was this inverted head and shoulders pattern right here that broke right there and then confirmed again. And this was our entry point. If we missed that, kind of tough luck right now. It's a little overextended. We either need a pullback or some consolidation here at the top end of the chart to clean this up. But I would absolutely love to see some consolidation followed by a breakout on silver. And my target is up around $35 on the futures market. Going out to copper futures. Copper is looking good. I don't necessarily like how deep of a retracement and how volatile this retracement was. We have held the 20, we have regained the 9, and if we break back above the high of this candle here, which is currently at $4.90 or $0.903 cents, get the little half penny in there. That would be technically confirmation. I might be interested in playing a partial position on this, but because of the depth of this retracement, it's a little interesting to me and throws a little bit of caution into the analysis. But I do like the look of copper, and I think there will be a play on it coming up here soon. Going out to natural gas, not a whole lot we can do on this. We did gap up higher after having a really nice pullback to retest the 20-period moving average. I do see this probably continuing up to around $3.40 in the coming weeks, but I would like some consolidation here before I get involved. Going out to palladium futures. This one had a chance to really do something and follow in platinum's footsteps, and it failed to do so. I do think that this needs a little bit more time, but I am eventually going to be very, very interested in the price break above this 200-period moving average on the daily chart. So not a whole lot to see between now and then, but if we do get a close and confirmation above this 200-period moving average on the daily, then if we toss this out to a weekly chart, you can see that we have been in sell-off mode for a couple of years now, and a close back up above this like 1070 to 1090 level would be a very nice consolidation at the low end of the chart and breakout, and we would have some room to rip to the upside. So keeping this on the radar, not ready for prime time development quite yet. Going out to platinum. Platinum, like I said, has been on a monstrous tear. We got our pullback that confirmed our support, previous resistance over here, as well as our 20-period moving average. We toss this out to a weekly chart. You can see that it is front running palladium a little bit and has actually broken back above all of its moving averages on the weekly chart and is trying to make another leg higher. Has some room on the weekly RSI, also has room on the weekly MACD. So I like the look of platinum. And now we are just looking for some kind of pattern here, probably a high base or a little bit of flag to then move higher back up to previous high and beyond. Finally, guys, let's go out and look at the dollar. This is what's been driving a lot of the commodities today and over the last 24 hours. You can see that we had kind of a flag-based pattern over the last couple of weeks. We are now threatening to break down below the 50-period moving average, got back above it, but we have the 9, 20, and 200-period moving averages, as well as our diagonal resistance channel here below, or excuse me, above us. If we get back above the high of this candle, which was 28.75, that will signal higher prices likely to come in the dollar, which will pressure commodities and the futures space in general. But as long as we are moving lower, which we do have some room to move back down into the lower support diagonal line here, that will be supportive for commodities. So as long as we kind of hang out in between these two channel lines, we should be good to go on commodities trading. And if we get a breakdown in the dollar, that will help commodities. We don't want to see the dollar start to rip higher and break out to the upside. If that happens, it will pressure the overall market and make bullish trades a little bit less interesting to me. Finally, if we go out, let's check in on our heat map. You can see this is a 1-week performance looking at the last week's worth of price data. And what very, very clearly stands out to me is it's a mixed bag with a lot of selling in almost all of the market, except technology and semiconductors. So what does that tell us? We have been in a market where the theme of the market for the last, I don't know, 8 months now has been AI development. What is needed for AI development? Well, NVIDIA, first of all, with semi-chip development, semiconductor development, and NVIDIA is obviously the leading force in this area of the market. And then other companies like ADI, Qualcomm, AMD, Avgo, MU, for Micron, these are all also having really nice gains, but NVIDIA is just leading the charge of the entire market, basically, within the one sector of the market that is the hottest right now. So it'll be very interesting to see if these companies in the semiconductor space can give fresh legs to the overall market in a broader sense to move for another leg higher. That is what I am looking for. That is where I am going to be focusing my attention in the stock world. I will also be looking at energy and seeing if the sell-off in energy slows down now that we have been getting our crude light futures trying to break higher here. So this will support money rotating back into the energy sector. And these are all real high-paying dividend companies there. So very interested in that. And then finally, just to wrap up, we have a number of news events coming out this week, but overall it's fairly light. Consumer confidence report was reported today at 7 o'clock. It came in and actually beat expectations, showing greater confidence than was expected. I don't really care about any of these reports on Thursday this week. These are kind of intermediate reports that aren't going to have a huge impact in the market this week because we already kind of know what to expect on the numbers there. Core PCE price index is going to be the one that I think is going to have the biggest impact on the market. So keep an eye on that before the opening bell on Friday. That comes in at 5:30 a.m. Pacific Standard Time. With that, guys, take it easy. Let me know if you have any questions. And as always, trade safe.